Hello, everyone, and thank you for joining us for another episode of the Financial Commute. I'm your host, Chris Galeski, joined by Wealth Advisor Patrice Bening. Patrice, thank you for joining us.
Good to be here, Chris.
Let's talk about 529 plans. I know that there's a number of different vehicles that people can leverage to save for their kids, their future, whether it's for college specifically or for them later on down the road. But there's some confusion around 529s and, what you can use the money for, what qualifies as an education expense. Can I now use it for kindergarten through 12th grade? So let's talk about some of those different things.
Well, it's funny. You probably want to have this conversation because I'm in the thick of this and kind of thinking how I'm going to use my 529. But kind of to your point, I would say in the last 5 to 7 years, there's been a lot of talk about the uses of 529, especially when it comes to expenses beyond just college. Sure. So a lot of folks have their kids go to private school. And so I have a 529. I've been saving for it. Can I use the money? The answer is yes and no. Certain states...
It's a very confusing one, right? Because the headlines say you can now use up to $10,000 a year for kindergarten through 12th grade. But that answer is yes and no.
But we are so lucky to be here in California. So in certain states, you can do that successfully. In California specifically, using the 529 funds to pay for K through 12 private school tuition is not considered a qualified expense.
Right. So even though the headline says you can now do it, California is one of those states that does not allow it. And so if you were to take the money out and use it to pay for kindergarten through 12th grade, you would get hit with, a 2.5% California tax?
So that's a special tax, and you also pay income tax on the earnings that you pulled from the 529. So it's great.
Got it. So people really need to pay attention to the state rules in which they live to determine whether or not that's a qualified expense.
Yeah.
Now, what about being able to use, so we live in California, so let's talk about California specifically. What about being able to use up to $10,000 a year to pay for student loans? Say I have excess money in my 529 plan.
So that is allowed, but that is a $10,000 lifetime that you can ever apply towards a student loan payment. So that would be something that, thumbs up, go ahead, you can do it.
And then last year, there were some sort of new rules or thoughts around what you could do with excess money in a 529 plan. So let's say, all right, my kid's done with college. I've got money left over in this 529 plan. I don't necessarily have another kid or family member that I want to use the monies for. Mm-hmm. I can use up to $10,000 of it to help cover student loan payments. What else could I potentially use those excess dollars for?
This is actually something really wonderful. And I think a lot of conversations probably both of us have had with our clients, even our friends, is that they are sometimes afraid to fund 529s more than they think they could because they're like, what am I going to do with the money when the child's done with school and I've already paid everything? So there's a new provision in place, part of the Secure Act 2.0, that allows up to $35,000 of leftover 529 funds to be rolled over into a Roth IRA for the beneficiary of that 529. So there's still right now, the IRS is unclear on if you have two kids,
but only one 529.
But only one 529 if you can split those beneficiaries. So right now you can technically because they have not defined that. There's also some nuances to this rule. So number one, you must have had the 529 for 15 years. Two, if you have made contributions in the last 5 years, those contributions cannot be rolled over to the Roth IRA. And third, the beneficiary of the Roth IRA, or who you're opening the Roth IRA for, your child, who's now an adult, they have to have active income. And actually, one more, I said up to $35,000, but it's not like we can take $35,000 and throw into a Roth IRA. We literally do it just like you would do Roth IRA contributions up to the annual limit for that particular year.
I'm glad you clarified that because that's one of the misconceptions. Like, I can move $35,000 into a Roth IRA. The answer is yes, you can. You just have to do it in chunks over several years because the annual limit might be $7,000 per year. So that's 5 years of making contributions.
And the beneficiary has to have, at minimum, that kind of active income in order for you to roll over that amount.
Got it. That's very helpful. So, some clarifying points around this. If you live in California and you want to use up to $10,000 a year for kindergarten through 12th grade, it's not a qualified expense. So you have to be aware of that. You can use excess dollars in the 529 plan towards student loan payments, up to $10,000 for the lifetime.
Correct.
And then there are some nuances around being able to use excess funds to go into a Roth IRA. You need to have had the 529 open for at least 15 years. The last 5 years of contributions are not, if you've been contributing the last 5 years, those contributions aren't eligible to be able to move in because there's, a 5-year waiting period.
Like marination.
Let's talk a little bit about what you can use 529 plan money for, right? So obviously we know, or we hear, it can cover tuition, mandatory fees, computers, books, supplies, and room and board. Mm-hmm. What if I own a condo that my child is living in? Can I use the money to pay for room and board there? Let's talk about some of those nuances.
So this is actually very interesting, and it came up in conversation most recently. So one of the clients that we work with kind of was going through this particular quandary. So they currently live in California. Their daughter's going to medical school out of state, and they are actually looking to buy a home out of state for her to be able to, they both want to live there, and then the daughter can also have a place to live, so that, because she's no longer going to live on campus.
Right.
So now the question comes this. A lot of parents want to have their kids, get some skin in the game. So it's not going to be technically free rent, but they're going to charge their daughter rent to live in their home. Is that a thing? Yeah, you can absolutely charge your daughter rent. But the question comes, can we use the 529 funds to pay for rent? This is technically room and board for their daughter. So the answer is yes, they can absolutely do that. Couple of caveats. The amount that they charge in rent and what they use the 529 for has to be similar to what the school would charge if she lived on campus.
And you can find that out by going to the financial aid office or looking at the university online, right?
That is correct. Okay. The other nuance is that the parents have to declare that income on their tax return. So they will have to pay taxes on that.
And that child can no longer be dependent. Correct. The parents. And this is a key thing.
Correct. So, and the child has to be off the payroll technically from the tax return standpoint.
And I'm guessing, I would assume that includes, can't be on health insurance and other things too, right? Completely separate. Correct. In order to qualify, which is one common reason why most parents won't end up going that route. One other interesting thing that I saw is that you can use the monies to pay for off-campus room and board. So that was nice to know. You can find out that amount, again, by going to the financial aid office or look at the university website. But you can also use the dollars to help cover some sort of food or grocery bills, even if they are living at home. Again, you need to figure out what that, sort of daily maximum is for food, but dependent on the university, right?
Yeah, exactly. Yeah. And I think I'm learning that just because my son's going to go to college. A lot of schools offer meal plans. But if you choose, let's say, not to get their meal plan, you're going to pay out of pocket. You can still use your 529 to pay for the meal plan, let's say for your own food bill, if you choose not to choose the schools.
Interesting. And then one last point to clarify in terms of being able to use $529 for room and board. Most schools are 9 months, right? And so if your child is living in off-campus housing and they're signing a 12-month lease, you can only use the $529 for the 9 months that school is in session. Those 3 months of summer don't qualify as a qualified expense.
Correct. So that's something that, if your child is going to take summer courses, then you could, but you have to be very careful on that because, yes, typically you could only use for the amount of time that your child's going to school.
Patrice, I love this topic because I enjoy 529s. I think they're a great way to save for your child's education and future, but it's another reason to have diversification of where to access funds. We don't just need diversification in terms of how we invest, but the different buckets and where we can access money to help pay for things in life. your child might have things that come up that a 529 is not an eligible expense. So we should think about, in addition to having a 529, setting aside money and call it a UTMA or UGMA account, another source of accessing funds where you don't have to worry about some of these rules and restrictions.
There's definitely, I would say 529 is not the whole grail for the college expense world. So yes, having an account that's just for the child. I would say the only caution with that is those particular accounts weigh differently from a financial aid standpoint. So kind of looking how at the college applications still have the assets and how they're weighted. And that's why we've even had talks about how grandparents, it benefits them best to be the custodians of 529, because when that particular asset will never show on the application, not for the parents or the child. And with the new FAFSA rules, the income is not counted either.
Yeah, so. This is great. Thank you so much, Patrice. I know that we're going to dive in more on 529s at a later date, but I think that this is really helpful. You can use excess money to potentially pay student loans, $10,000 for the lifetime maximum. If you live in California, be very careful about using money for kindergarten through 12th grade private school. Pay attention to some of the Roth rollover rules that are related to excess money in 529 plans. And if you're going to use some of the money to pay for, off-campus room and board or a condo that you own for your child, there are some very specific things that you should look into and talk with your CPA about. Thank you so much.
Thank you.